Hi everyone, this is Pete. So today we are here at our daily market charts. 12th of April is actually Easter Sunday, so happy Easter to everyone out there. Now, if you are at home like me doing our part to fight the virus, alright, good job to you. Alright, stay home, stay safe, stay healthy. At the same time, because it's Sunday, there's no daily market charts to look at. So what we do right here is I'm going to talk about Howard Marks. And some of you might be asking, again, right? Because I just talked about Howard Marks less than a week ago, and right now you're talking about Howard Marks again. Why? And that's because Howard Marks actually did his own record breaking in terms of writing memos. This time round, he wrote 4 memos in March, and that's why I wanted to make sure you guys get the full gist of it to understand what this guy is thinking, and because he's one of the best guys in the industry for investing, and I want you guys to learn from him as I have benefited from reading his memos. Okay, just a little bit of background for Howard Marks, right? Why do I listen to Howard Marks? It's because he's really one of the most methodical investors I've known, beside Peter Lynch and Charlie Munger. And that's why I want to learn from him, because in investing we hear a lot of noises, we hear a lot of people talking about whether the market is going to up and down. While I myself do like to participate in that, I like to have a sense of where the market is right now. But really, is very much influenced by Howard Marks, Peter Lynch, and Charlie Munger. It's about understanding the risks, right? Understanding whether are we at a risky environment or are we at a low risk environment. Okay, so his advices are really very timeless, and one of the best thing is that his memos are very easy to read. Okay, unlike Benjamin Graham, who writes very complicated sounding books, Howard Marks' memos are short and easy to read and very, very good advice. Okay, um, usually he writes about 1 to 2 memos per quarter, but this time around he really outdid himself. He wrote 4 memos in a single month in March, and that's why I want to go through them today. Okay, because when your mentor writes more, you better listen as well. So on the 3rd of March, he wrote about this thing called nobody knows. And basically he's saying that the stock market may turn around, may go up or down, and you may be happy if you already bought some if it goes up. However, if it continues to go down, in which case you'll be left with some money and hopefully the nerve to buy more. All right. So that is something that is very hard to do for many investors, including myself. Right. And the truth is that we don't know what's going to happen in the future, and that's why when we see there's great value, all right, we go in and purchase because we don't know what's going to happen, right? So nobody can tell you whether this is the time to buy. All right, many of you have been asking me, including my close students, right? Hey Pete, is this the correct time to buy? Is it the correct time to buy? And my answer is always, I don't know. I don't know. Okay, so how do I decide when to buy? Okay, so the later memo is going to share with you on that. So he provided another update on the 12th of March to his client. So this was not a public memo, it was only a Oaktree Capital memo. Okay. And he talks about the best time to buy is January when nobody else wants to buy. Okay. Because he said that the people's unwillingness to buy makes the security cheap. Okay. And that is the best time to buy. However, the last sentence actually is equally important, is that the factor that makes other people averse to buying will also affect you. So basically, he's talking about this thing called FOMO lah, right? Sorry, I can't really write very well when I'm writing on a laptop, but basically FOMO, all right? And this time around, it's not the fear of missing out, it's the fear of losing money. So if people are averse to buying, you'll be like wondering, hey, why is everybody not buying? Should I buy, or should I follow the crowd? And bear in mind, humans are very herd behavior people, right? We are born to look around and make sure that we are doing something that everyone else is doing because there are safety in numbers. That's how we evolve, okay? So how much trying to tell you that actually the best time to buy is when nobody else wants to buy. But just remember that when you see no one else is buying, you'll be very tempted and be very afraid to buy as well, okay? So he's saying that you need to be a contrarian to push through all these feelings and buy anyway, all right? Because a great investment often begins in discomfort, all right? And he's saying that one thing we know for sure right now is the market is having a lot of discomfort. I truly agree with him, 100%. In fact, most of my best investment that I've ever made, right, is when I made them in a very, very very uncomfortable position, right? I bought into those investments when it looks really horrible. It looks like, wow, this is the worst time to invest. The news is very bad for the stock and things like that. But more often than not, these are also the times when I made my best returns as well. Okay, so just remember this. Whether is it something for you to take a look. All right, one great example is when I bought into Apple back in '09. All right, it was one of the hardest decisions to make because Apple seems to be losing and they just had Steve Jobs leaving the company and it seems like it's not going to be doing well. But hey, great discomfort, but also great investment. Okay, and on the 24th, he wrote to his clients again, right? He said, the panic we are observing and the great purchases we made this week convinced me that, he's having an argument for buying. Okay, so he's taking a position to buy, and he said that it would be a mistake to wait for an ascendable bottom. All right, that's a long word, ascendable bottom. Basically, he's saying that you never know when the real bottom is gonna be. All right, so just forget about that because it's impossible to know. So when do you buy? You buy when you assess that the price is cheap. All right, when you can assess the price is cheap, then you buy. Okay, so he believes that this is a good time to invest, although it may not be the best time. Now, I'm not sure how many of you all truly understand this statement. Okay, it is a good time to invest, even though it's not the best time. Right? So he's saying that right now things are already cheap, so therefore it's a good time to invest. But why is it not the best time? Because can the stock market continue to go down from here? The answer is definitely there's a chance. All right, there's a possibility. Okay, whenever we are dropping like this in the market, and let's say there's a great recovery and like that, at this point, can the market go up or down? Nobody knows. All right, but for sure, this is already a good time to invest versus here. Correct? Of course, the best time will be here, but nobody know when will that come. Okay, so he's saying that no one can argue you should spend all your money today. Okay, but no one can argue that you shouldn't spend any. And that is very, very good advice because he's saying that you should not throw all your money in. All right, you can spend a bit, start investing a little bit. Okay, because on the 31st March, he wrote again, he talked about this thing called the reasonableness to buy. All right, where like in various degrees, okay, in response to how cheap the stocks is. Okay, so he's saying that this is not about whether this is the time to buy or this is not the time to buy. He's saying that please have an incremental approach. It is not about going all in or all out. Although that might sound like an ideal situation, but it's very hard to achieve. So simply put, when the market drops sufficiently, you can start investing a little bit, buy those stocks, buy the index or whatnot that you want to invest because it's cheap. All right, but buy in stages, incremental approach. All right, certain percentage, maybe 20% now, wait a little bit, 20% later if it drops a bit more, things like that. Okay, and the main thing he talked about at the end of this whole thing, and I summarize, is he's talking about a balance between being offensive and being defensive. All right, the defense is that you want to mitigate the risk of losing money. And what's offense? Offense is about the mitigating the risk of missing opportunity. Now, usually these two are mutually exclusive, right? When you play a lot of defense, you play less offense. When you play a lot of offense, you are less defensive. Okay, so Howard Marks acknowledged that 100%, and he's saying that right now he feels that it's a time for anyone that is more defensive, all right, previously cautious, to really move towards more offensive or maybe just a neutral. Okay, because he's saying that right now he's less worried about losing money, okay, but he's somewhat interested in making sure that his clients or his fund participate in the gains. Okay, you see what I'm saying? If I were to draw it out, what he's saying is that right now the market has come down so much, and right now we saw a recovery like this, maybe about halfway. Okay, he's saying that at this point, all right, he's not sure whether the market will continue to. Let me change the color here for you. Okay, he's not sure whether the market will just move on from here, or will the market continue to track downwards like this. He doesn't know. But he's saying that right now he's less concerned about the blue line. Should he invest here? He is more concerned about the green line, should it happen. Okay? So this is something that Howard Marks is talking about, and I agree. All right. You need to start investing when it's cheap enough. Okay? And for me, this was a very good time because when there's a little bounce like this, at least I know that we have seen a one bottom. All right. And I know that there's some appetite in the market, that the market maybe have bottomed out. I'm not sure. Okay? But at least we know that from here, at this point, is cheaper than here. Okay? So he also talks about the question about should we wait some more, because some people say, hey, if you expect more bad news, which is what he said in his memo, should we wait for the market to drop, because the market can drop some more, can drop further, right? Shouldn't you wait for the bottom? And his answer is a flat out no, right? Because he says that we will never know that we are at the bottom. A bottom is something that you can only see on hindsight, all right, or in retrospect, which is the day before the market goes up. All right. So he says, since we don't know when the day is being reached, and since that's a function of what will happen tomorrow, he's saying that, hey, it is actually an irrational statement to say that I'm going to wait for the bottom. Okay? So I always say this, when the market is dropping, while we can do some kind of projection whether this is the bottom or not, but that should not stop you from buying because it's already cheaper than what it was before. Okay? In fact, I was having this conversation with one of my great mentors, Sean, all right? And he was talking about buying properties. And he said that, hey, Pete, properties are getting cheaper and cheaper. And should maybe it's a good time to start buying. And I myself was also affected. I was like, but Sean, maybe it can get cheaper. I don't know. And Sean once again reminded me that, hey, if it's already a good enough price and it's already much cheaper than what you could have paid 4 months ago, why not buy it? Okay, because we can never find the bottom. So I don't know, is it planned by someone, but in a short span of a few days, I heard from two of my mentors talking about, don't wait for the bottom, and I fully agree. Okay, which is why I've also been buying in the stock market in drips and drabs. I'm about 50% cash, so I've already thrown in half, and I'm just waiting. If the market going to crash another some more for a few more months, hey, the rest of the 50% is going to come in really handy. Okay? Because ultimately, we are investing into great companies. We have a long-term perspective. Now, if you have a short-term perspective, then this may not apply to you. Okay? If you are trading the market in the short-term perspective, this will not apply to you because your profit and loss pretty much determine the market tomorrow, whether it moves up or down. Whereas for me, because I have a long-term perspective, right? For example, I'm the long-term shareholder of Apple, right? Apple dropping 5 to 10% tomorrow wouldn't make a difference to me so long in the long run it's a great business. And I think that's what Howard Marks is trying to say at the end of the day, is that if you're buying to something that's really solid, good price, all right, right now everything is going on a 20 to 30% discount still, even after the recent rally. Okay? Should you start buying a little bit? Absolutely yes. Okay, it is not the worst decision to make, because right now for me, I'm also thinking like Howard Marks. Basically, I don't want to miss out on the opportunity, right? I want to play a bit more offensive. I want to participate in the gain as well. But I always remember this: can the market go against me after that? Absolutely yes. Which is why I will not do it, hoping that the market won't drop. Okay. So the thing is this: perfection is the enemy of being good. All right. So he ended off by saying that investors' goal is really to make large number of good buys and not just one or two perfect buy. Okay, because it's hard to reach perfection. And this is really his best statement in the whole memo, I feel. All right. If something is cheap, between the price and the intrinsic value, you should buy. And if it gets cheaper, buy some more. All right. And the thing he says is that it's very weird to some people, but to him he's not troubled at all to say that the market may well go lower, considerably lower, sometime in the coming months, and they are buying today when they find good value. He thinks that both statements are not inconsistent. Right? He does not find the statement inconsistent. This is a very, very, very powerful page. All right, it is really showing you how great Howard Mark is, because he's able to hold two seemingly opposing thoughts in his mind at the same time and still find that they are actually consistent. Okay, so for me is this, after reading whole this, once again, I look at my own mantra is that this may not be the best time to invest, but it is a better time than before. All right, comparing to 2 months, 3 months ago when the market prices was at all-time high. All right, so I hope you guys learned a lot from this session. It's a bit long, it's a bit theoretical. There's not about numbers, there's not about charts, but once again, many a times the main differentiating factor between a great investor and someone that's mediocre or lousy is not about the business they invest in only. It's about the mindset, the psychology of an investor as well. Okay, so I hope that you guys learn a lot from this session. Once again, I'm going to share this with the public, so I hope that the public sphere, everyone can benefit from this, and I'll see you guys in the next video.